Hello everybody, and you're very welcome to our budget presentation. As some of the headlines have had it today, one of the most widely anticipated and ultimately draconian budgets that we've seen in recent history. We aim to take you through some of the main changes today, not merely the headline changes that are grabbing a lot of attention, but also maybe some of the lesser commented upon changes that could nevertheless have a very, very dramatic impact on you as well. Just to start, I suppose, a backdrop to Budget 2011, and some may say that there's no need for us to do this because I think the implosion of the economy over the last 2 years is something that has escaped nobody's attention. Nevertheless, the Minister had a fairly long introduction in his speech yesterday covering the backdrop. He described it as a traumatic and worrying time for the citizens of our country, and of course he particularly referred to the turmoil in the banking sector. He did make the point that in terms of GDP, it had been a fairly drastic cut of 7.6% in 2009, although he's expecting a small rise in 2010. He expressed hope that there would be improvement in the real economy. He said there were some good signs there, particularly in the area of exports, although he conceded that domestic demand does remain weak, and in particular in light of the turmoil that people have felt and some of the events of recent weeks, and he alluded to them yesterday, the involvement of the European Union and the IMF. He did say it's understandable that the domestic economy would continue to struggle a little bit in light of this. In 2011 then, the theme is taking the large budgetary measures now in order to avoid an even bigger and more wrenching adjustment later. People will be familiar with the Programme for Recovery, or the 4-year plan that was launched there 2 weeks ago. That particular programme, although it aims to get things back in order by 2015, it actually commented that a lot of the changes, in particular in the area of personal taxes, would be front-loaded into the first year. And for example, it did state that 65% of the income tax changes would kick in 2011. And as we'll see in a minute, that promise has largely been met. So, in 2011, what do we get? Well, the headline changes, if we were to summarise them, are significant personal tax increases, some important changes to business taxes, a significant curbs to reliefs and incentives. We will see actually that that's one of the areas where there have been radical changes but won't really be headline grabbers, and we'll look at those in some detail. We have a presentation covering that area in itself. Overall, I would comment that there have been some very detailed and far-reaching changes proposed, so careful and indeed urgent planning would be strongly advised. It's worthwhile reviewing your circumstances and seeing what you can do in order to at least ease some of the burden, because as we'll see, everybody really will be affected. So let's have a look at the income tax changes, I suppose a favourite area of people on every budget day. We would have been used to seeing and asking how much more money was going into our pockets up to about 2 years ago. Obviously, in recent years that has changed, although funnily enough in the December 2009 budget there were no changes made to income tax. There was a bit of respite there after the two previous budgets, but they're back with a vengeance this year. We're seeing the curbing of credits to bring lower earners into the tax net. It's been well commented upon that up to now an individual could earn up to $18,300 before paying income tax, and as we'll see, that has changed somewhat. We are seeing a significant curtailment of tax bands to catch middle income earners, so people will pay the 41% tax rate at an earlier stage. The new universal social contribution will replace health and income levies. We look at that in some detail because that's actually quite a big change. The employee PRSI ceiling has been lifted, which will impact on higher earners. And finally, as I said, significant curtailment of pension and property-based reliefs will impact on higher earners. And as I said, we have a separate presentation on that in itself. So the tax credits then, essentially broadly a 10% reduction. So a single person up to now would have had an €1,830 credit and another €1,830 if he was a PAYE employee. They've both been cut to €1,650. The impact on that is that an individual now will pay tax once they hit €16,500, whilst it was €18,300 previously. And those credits are expected to be cut further over the next 3 years. Obviously for a married couple, the credits are twice them, and they've also been cut by 10%. The tax bands then, a 10% cut here as well. So for example, a single or widowed individual will now pay income tax once they earn €32,800 as opposed to €36,400 in the past, in 2010. Now, if you want to go back and have some historical context here, back in 2006, that figure was €32,000. So we're broadly back at 2006 levels again. A married couple obviously will be able to earn twice that before they hit the top rate of tax, although if only one of them is working, the impact of individualisation kicks in, and again there's been a sort of a pro rata 10% reduction there as well, so that the top rate of tax kicks in there at €41,800, but broadly a 10% reduction across the board. The universal social charge is quite an interesting change. The Minister in last year's budget said that he wanted to simplify the system of PRSI, health and income levies. It had got very convoluted in recent years. Different rules for different people and different rates. Some people were paying the health levy but not the were paying the income levy but not the health levy. Some people were exempt from PRSI, others weren't, and there were different rates in place. It got very confusing. So he wanted to simplify it and introduce one social charge, which would also have the impact of having everybody paying this, which would obviously be a revenue booster. Now, for most people, this will be a 7% charge. What he has done is he's left PRSI alone this year, but he has got rid of the health and income levy and introduced this particular social charge instead. So a 7% charge. It will impact heavily on the lower earners, who up to now would have only paid a lower income levy of 2% and no health levy. So there's a 5% hit for the very low earners, and we'll see how that impacts even more dramatically than the tax credit cuts. For the very top earners, funnily enough, there's theoretically a cut. This is for the people earning over 175,000, from 14 down to 11% when you amalgamate PRSI and the levies. But as we can see, they will be impacted in other ways as well. That will maybe curb some of that back, so it's maybe not really a gain for them. PRSI, as I said, very few changes here. Self-employed PRSI has been increased from 3 up to 4%. The employee ceiling, this is for the Class A PAYE employees. Up to now you wouldn't have paid it above 75,000, now you pay it on your full income. But for most other people, PAYE employees, no change really in PRSI, although pension contributions will no longer qualify for PRSI relief. Let's have a look at some of our examples. We'll take two examples here. We'll look at the lower earner and we'll look at the middle earning couple. So Sean, a single man, earns 18,000 per annum. Currently, all he pays is PRSI and income levy, no income tax and no health levy for Sean. It's €816 per annum. But he will now face deductions of €2,016, because the income tax credit cuts will bring him into the tax net and he'll pay €300 in income tax. No change in PRSI. But the universal social contribution will really hit him, because he'll pay 7% now, which is €1,260. Prior to this, he's paid a 2% income levy of €360. So that's your 5% hit for the lower earner on the new contribution, €900. He's worse off by €1,200 per annum, which at a low income level is obviously proportionally quite severe. Tom and Lorraine, a married couple, both working, earning 100,000. Currently, 27,864 is their deductions. They're paying everything, obviously, income tax, PRSI, health and income levies. Post-budget, 31,096. The increase of 3,232 is made up of extra income tax, particularly because of the tax bands being reduced, but also the credits, of 2,232, and then an extra €1,000 because of the social contribution. Because up to now, Tom and Lorraine, like most middle income earners, would have been paying 2% income and 4% health levy, so they've gone from 6 up to 7%, and no change in PRSI. Other points to bear in mind for people such as these: Tom and Lorraine hope to start a family, and indeed some of their friends already have, and they're seeing cuts in child benefit of €10 per child per month, and indeed for the third child, €20. Though funnily enough, for the fourth child and subsequent, it gets back to €10 again. So that will impact on these couples. Going back to Sean, he's worried that a cut in the minimum wage will lead to a drag effect, thereby reducing his income, because although he's not on the minimum wage himself, some people in Sean's position, their wages are linked to it. They're all aware of property taxes and water charges coming down the line, and they're all aware that this is the first of 4 years of pain, although supposedly year one will be the most painful. Mind you, as I said, the 65% promise has largely been met, because most people in middle income earners are supposed to take a hit of €1,800 or thereabouts in personal tax hits, and as you can see, with hits of 1,100-1,200 this year, the 65% promise is largely being met. So to summarise on personal taxes then, all income earners are being impacted negatively, but particularly painful for the lower earners, who are now subject to income tax and the new universal social charge. And we're also seeing then the middle income people with children and so on, are being impacted, and in particular when you take some of the other measures into account, like the child benefit cut and like some of the stealth charges that we look at later on. One could say, and I noticed some of the media commentary this morning is focusing on this, that it's younger people and middle income families who are bearing the brunt. Younger people are probably more affected by things like, because they tend to be on lower incomes, by things like the minimum wage changes and bringing them into the tax net and the universal social contribution. Middle income families, they're people with children, both working in average jobs and so on. We've seen that they're taking a substantial hit as well. but I think everybody is going to be impacted in some way. And now as we go on to the other parts of the presentation, we'll get a good look at how exactly that is the case. So then, of course, that concludes our personal tax section, an old favourite, and no doubt you may very well have questions. tax@newmarket.ie. If you email us, we will go through those questions with you in detail. Now we'll move on to some of the other presentations to look at business taxes, restriction of reliefs, and some other measures.